I'll be talking about four themes here. Firm and sectoral linkages in real estate, ecosystem-oriented supply chains, real estate value chains, um, vertical integration strategies for developers. I'll be mainly focusing on firms and linkages uh, with the suppliers upstream and their customers downstream. I'll be focusing more on real estate supply chains rather than constructions. I believe that this area is neglected, and I'll be using modern strategic management concepts. So I'll just go through the next one. So I'll quickly introduce my firm, Meinhard. Meinhard is a global advisory, design, engineering, and project management firm. We are headquartered in Singapore. The group is ranked largest in Asia with 6,300 professionals, 64 offices globally. We have involved in very high-profile projects in the region, including Dubai Mall, Doha Airport. Locally, we are involved in all PIF projects. So what do? We are end-to-end multidisciplinary firm, starting from business case, feasibility study, up to asset management and everything in between. We are Middle East most awarded firms recently. We are ranked 10th in 2024 for global engineering firms ranking by ENR. I'll go straight into exploring firm and sectoral linkages in real estate supply chains. This will set the stage for the discussions going forward. In essence, real estate supply chain consists of linkage between sectors and firms, and navigating, and managing risk events generated through the linkages, networks, and interactions within real estate supply chain obviously is the key to resilience and risk management in real estate. Obviously, on the right-hand side, you have a value system interdependency exhibit where you have supplier, you have suppliers, the firm in the middle, and then you have the customers, and then the customers' customers. So the firm in the middle is obviously doing all the strategic partnerships. The real estate ecosystem is quite large, actually. Obviously, construction is one of the largest suppliers into the real estate sector. But obviously, above that sector, we have, obviously, we have the infrastructure markets, we have the real estate markets, capital markets, housing markets, and mortgage markets that are supporting housing markets, which is maybe equivalent to the construction sector as well. Obviously, I'll try to go into back here. Obviously, I'll talk about ecosystem-oriented real estate supply chains. Obviously, the traditional supply chain is a traditional vendor-supplier relationship. So the new economies are going beyond that, and real estate, infrastructure, and construction is one of the largest ecosystem in the world. And an ecosystem approach basically is a community of physical and digital real estate businesses from different real estate sectors that come together in the interest of providing customers what they want and where they want. This is typically driven by real estate supply chain players collaborating. They're sharing assets, they're sharing resources, and they're sharing information as well. They're not the traditional thing, they're much beyond that. Obviously, ecosystem-oriented supply chains tend to expand the pie, and the value is created and is shared by the players. How the value is created and who captures that value is the key, actually. On the right-hand side, you can see the scope, scale, and the complexity of the real estate sector. It's huge, actually. It's one of the largest ecosystems in the world, maybe larger than the retail ecosystems that you will see later on. It's 6 major asset classes. You have 10 industries, maybe 12 to 15 professions, 20% of the GDP. A single project can be $10 million to $100 million, 2 to 5 years. Major development properties or projects like giga projects here runs into billions of dollars, 10 to 20 years of construction period and asset management. There's significant assets and operating expense, and the risk increase with scope and scales. And all these feeds into real estate supply chain resilience. You need an ecosystem, cross sector and cross-supplier ecosystem that will feed into the resilience system of this thing. I'll now talk about real estate value chain connections is very important here. Real estate almost underpins all business and commerce activity. It is underlying and supporting all the commercial activities in the world. And the place and space, the framework to address the importance, the value connection of real estate to business and commerce. Obviously, if you look at the example of McDonald's is a F&B retailer, but it's supported by huge real estate, and McDonald's make more money on real estate than the F&B business actually. So this will tell you the scope and scale and the supply chain connectivity of real estate to the commerce and business actually. Obviously, if you look at the right-hand side, is the retail value chain of any, maybe, let's say, a shopping mall, and that is underpinned by the real estate sector. On every stage of the value chain of retail, you will see that the real estate is supporting that. And how you create this resilient supply chain needs the understanding of the industry sectors itself. The last one, obviously, is how resilience can be created through vertical or integration or disintegration strategies in supply chain. Obviously, the drivers of vertical integration, obviously there are strategic considerations, output, input, price advantages, transaction cost advantages there as well. Obviously, in strategic considerations, land banking is one of the most important one because of the immobility of land and locational aspects of land. Obviously, the developer who controls strategic land will have a higher control over the supply chain in terms of land bank supply chain, if you can call it. So in the right-hand side, you will see types of developers, and in the land development process, how they are vertically integrated or disintegrated, and obviously how this impacts the supply chain resilience of the sector and the players themselves. So this is all from my side. Thank you very much.